everybody, I'm Giuseppe Basili, also known as the FibStalker. Thanks for joining tonight for this brief daily and intraday review. I'm Giuseppe Basili, also known as the FibStalker. I'm a full-time trader, market strategist, and mentor. Today is April 25th, 2018, and this video is part of the FibStalker Analysis and Trading Service. Now, as usual, if you have not done that yet, please stop the video here and review and accept the usual disclaimer here. Past performance is not indicative of future results. Trading Forex carries a high level of risk and may not be suitable for all investors. The information that I provide is merely material for your general information. Okay, so let's get into the markets here, and what I'm gonna do, I'm gonna review some of the majors here and see the major developments and things that are happening here. Probably the major development here in the Australian dollar US dollar, which you see on the screen here, it's that first target being hit. So at this point we are entitled to trace the next measure move, which is this 76.81. you see, from highs to lows here. If the market gets there, we're going to test this level for a continuation low. Now, that said, this market has been very weak, also due to the strength that we're seeing finally in the dollar index. So to me, it's much more probable that this market just continues lower this week or next week into the bottom of this range. Okay, once that is tested, we are kind of in uncharted territory here, just because this market has not been technical as other markets as well. And when we look here at the daily, the trades that I like to use for lack of better traces here is this 50%, which was not respected before and started being respected in April last year, and brought price into that first target. Okay, because the next measured move has failed, then and this is a range as well. So the two levels that we have to watch here are the bottom of the range here, as well as a retest of this level. Or if we want to consider the sequence, then we should consider the full 50% from lows to highs. Okay, and neither of the two here came into play again. So the first one would be this 74.82, which is very close to the bottom of the range. Okay, so if the market gets there, we could see a bounce due to this 50%, and we're gonna see whether that's temporary or it's a new bottom for this market, and this market is going to start moving higher. Euro dollar, finally we're seeing the euro dollar moving lower here. So this whole sequence of measured move higher, as you know, has failed after the aggressive measure move here has failed. And so what we're seeing now, it's a move lower. The market has not been technical during this lateral move here, lasted for several months, 3+ months here, and we know that that's a typical behavior. The market jagged and does not follow very initially when it turns in this condition, does not follow 50% retraces, but eventually this market will start doing just that. Okay, so if we look at the daily here, we need to, and identified here, potential next extension. Of course, this market is very extended, so instead of using this anchor, algorithms might use a different anchor, even the low here, but that would mean no bounce at all. Okay, so I'm gonna look for 120.80 trading here, and then we could get a bounce, and that could be now a tradable bounce for a continuation lower, at least another move lower in this market. Okay, so we'll need to wait for that. Pound has been weak as well, and here I have the 140.14, and this market is very extended here, and algos are going to use either this low here to lows for the bounce, or they're going to use the first of three long bars here. And then, as you can see, they have used that already. So if this market puts up some profit taking here and the price gets back into this 139, 140 level, then we could see renewed selling here, and that would be the opportunity if this market is capable of moving higher. Okay, but very, very weak market, but eventually the dollar index will have breath, and we'll take a breath, and then could be the opportunity for continuation shorts in all these markets. US dollar Canadian dollar, so if we look at it from a technical point of view here, there was support from the 50%, there was resistance from on a larger time frame in this move here, which pushed price lower, participation here, and that pushed price lower, and this market is now very it's moving laterally, and it's actually respecting long and short at the moment. The short that was respected on news last week, it's the long is the one that is below price here, 125.90, 126 level. Okay, so at the moment, what we have to say about this market is that it's oscillating between these two areas, and today, sorry, in the last few days actually, it has actually also held the 50% short here. Okay, I don't consider that broken. However, this the pace of this move here is very, very strong, so I do not anticipate this market moving lower quickly. We are seeing the euro Canadian dollar moving lower, and let me review that also because of the activity in the euro, but that's not caused by weakness in the US dollar Canadian dollar. Okay, and about the euro Canadian dollar, we know that the wall trend higher here has failed, so this market has the potential to go and test the 50% long of this big move here, and eventually it could get there. Whether that's the start of the move, it's not given. For sure, if the market gets into 158.10, and we're going to see whether it's going to happen, or this market just starting the reverse here, then that would be a much stronger short there. Okay, as a support here from bulls, we're going to consider the 155.70 if that trades. I think someone was asking about this, Craig. I also saw right now a question from Romy. Romy just joined the move here, and he's asking, is 33.60.80 a good area to unload? That's what I wrote, and he said it's still good to buy entry now. Well, it was to unload longs, Romy, so that's not an option. If we go back to that post there, it was in the analysis as well, but basically this is the picture that originated that comment, and as you can see here, this market was long from it was long from lower levels here, and in the 33.80, 62.80, it's an area to take profits out, not an area to start new longs. Okay, this market is very, very sad. That's not the way we trade. Before getting involved with the trade, it's important to understand the concepts. Okay, so very important that for those of you who actually are in trial, to go and review and watch and study the Winning with Algos course. Okay, it's very important to understand the concept. I don't want people just following blindly what we do here. That's not the intention. I want people to understand that they have to change the way they look at price, and we propose a way to help identify structure and price, which is very, very important, and it's closest to mapping what really professionals are doing. Okay, because don't forget we are retail traders. Okay, so I don't want people just following what we do. I want people people understand what we're doing here. That's our philosophy here. So please watch the videos, watch the course, and understand the philosophy and how we do things. All right. So US dollar Swiss franc has been an interesting market here. I actually played a recommended 95.40. Well, sorry, I don't recommend, because in the end, I cannot, I cannot recommend trades. What I do, I show what I would do actually, and I show the analysis and I show the opportunities. Now, when we look at this, the market went into the first and second target and well above that second target. So if we see a continuation higher in this market, which is not impossible, it needs to come, to be safe, to be low risk, it needs to come from the next measure move. Okay, so the next measure move in this specific case for the US dollar Swiss franc, it's a long, and it comes from 97.50 here. So if we get this deep retrace here, that would be very good, and would be a great opportunity to trade this market now potentially into previous highs, because that would be a 97.47 to 99.70. So that's a 220 pips trade. If this would trade, and it would go to the second target. There are a lot of ifs, so what we do when we trade, we protect ourselves as well. We're risk-free trading, but that's what we see in this market. And this price keeps moving higher, and that's very good. It's in a range. Sorry, I just want to comment. The US dollar Swiss franc, it's in a range, and it has the potential to reach the top of the range. The setup for that is identified. It's there. Okay. So next is the US dollar Japanese yen, and similar situation here. This market continued higher, and again, there was there was a comment on this, and I just want to show you the sequence of measured moves in this market. Sorry, the sequence were for the US dollar Singapore dollar, and let me wait then, because I want to show just here the sequence of measured moves that Craig has traded the last one here. I just want to, we will get there. When it comes to the US dollar Japanese yen, in any case, likewise, other markets is moving higher. So again, we have extension along for these markets. All these markets are very extended. The dollar index could take a break here, and all these markets will come down, possibly into the next measurement. That would be nice to have. 108.60, if the market gets there, we're going to time this using the FibStalker timing. And now what we have to be aware of is that on the upside here, there are two levels. One is a partial range, the 109.70, that could act as a resistance, and the other one is the full partial range here, the 111.70 level. Okay, so whether each of every of these levels is going to act as a resistance, at least partially, and bring price lower, we don't know. It's not given. And what we know is that if price gets into the next area of next measured move here, 108.60, we are going to trade that as well. Okay, New Zealand dollar, US dollar continues strongly its move, its strong move lower here. That's what we are seeing. Here we go. So the this market didn't care about this 50%, and we knew that because this market is in a range, right? And as you can see, it keeps selling like there is no tomorrow, and we will see whether any of these levels or areas here, maybe below after the 61% level is pierced on the downside here, is going to act as a potential temporary support. What would be nice to see in this market is see something similar to what we saw last year in October, a quick rally, profit-taking rally here, and then next continuation lower, and that would be, we'll be adding to this short trade here into where? Into 68.80, which remains my target here for this trade. Okay, so we will see whether this market is going to give that to us. No consideration where this market could stop. The only area I see, it's on top of this area here, but they might well not come into play as well, so we don't know. And only if we get the bounce, then we are going to act. Otherwise, there's nothing to do in this market, and this market could just continue lower here into the target. Okay, but it's definitely a great it's a great move here, and the 50% is not working, obviously, because this is a range, and in a range the 50% do not find participation, so there's no one there trying to pick that. Smart money knows on the smaller time frame here, daily and 4 hour, knows that the majority of shorts, smart money shorts, came from the highs or nearby, and so they're not going to buy this market. All right, I want to continue and look at the US dollar Singapore dollar, and this market has continued higher here. We are not yet in the target area, as Rami was asking, but it's too extended to risk that, because if you buy here and then the market corrects down, there's no way you are gonna make money on this market. Neither we can assume that to just buy here and wait that the market gets there, because we have to do risk management. That's not the way we trade. All right, so in here what we can see is that there was on the daily here, we can see that algos have used this have used the first long bar here, the high of the first long bar to the highs, and that's exactly the sequence that also was highlighted before at 5 p.m. here by Greg here, and basically this is a sequence. So let's look at the sequence on the 4 hour time frame, and the high here was could be used, and as you can see here, there is a very small measure move here, very small. Let me remove these lines because we don't need them any longer here. And here there was a high to high, and this has traded as well. This was not was not easy to trade, and for starting traders, I do not recommend doing that as well. There's no need to do that as well. I mean, of course, if you have more experience like Egg, you can do that. The next measured move was the move that we also saw on the daily. So the this measure move here, this anchor here, corresponded to a 4 hour anchor as well. Okay, so it was a daily jumping extension and 4 hour level. Okay, so let's review some of these other markets that might be of interest, and I want to review the euro pound. Yesterday and the day before, I mentioned the 50% short here. So far the market has followed up, and we'll need to see if this market can accelerate into the first target, which is, I'm going to remove the larger move here. This move here, it's part of the larger move in any case. Okay, it's a sequence, it's an inner sequence, and here the target is 85.40 area so far, and particularly today this market has moved decisively lower here. We'll see whether this is going to continue. Is trading the 87 87.90 area. There was another questions on the euro Canadian dollar here. We reviewed that. Here there are extensions in play, obviously, if this is the relative high in this market, and this would be the level I would consider here. Okay, I have not traded this one, but we know that the full sequence here has failed. Okay, another market that I had took into consideration at the beginning of the week was the New Zealand dollar Japanese yen, because I was carrying New Zealand dollar US dollar short. I did not add basically the same kind of the same trade idea, and also I didn't do that because of the strength in the Japanese yen. So I didn't need to do this, but eventually then this trade, which was not a long, it was anyway a short, although we saw some participation at the beginning of the year. I think that someone has mentioned the fact that this could be a long if this market reversed, but looking at the New Zealand dollar how weak it was, then it was basically impossible. So let's look at the dollar index. So similarly in here there was a trace that I made yesterday, if you remember that. This level has never traded. This is the previous high, never traded. Likewise for the US dollar, Singapore dollar, this market came to trade an extension, okay? And it's holding extensions within this larger measure move. Now when we look at the larger measure move, the first target, where is the first target? Let's highlight that, and let's also highlight the second target. The first target is just above prices, and it's likely to be reached this week, maybe even tomorrow. Okay, now when that happens we could see some profit taking. We don't know yet, this market though is very extended, so even if we do, worst case scenario, on the daily here we have the previous highs, basically the 90.22 level. Okay, now the first target here has hit. Let's see if this continues side. If it doesn't, we're gonna have our failure level, that is the highs, to whatever new highs, for the failure of this trend, and then if that's the case, this market will could actually, not will because we don't know, but it could come back. If it continues higher, remember that there is a second target of this inner move, and then there's a second target of the larger moves. Okay, so it's very clear here the path for this market, which is finally back to technical again. SP 500, this market is just oscillating between these areas, and I showed you the study at the beginning of the week. This study might be there for some time here on the weekly, for several more weeks. I'm not interested in trading the SP 500 at the moment. When we look at the 4-hour time frame here, this market is not even trading in traditional measure moves, which is typically what this market likes doing. So let's look at the first measure move here. It was a 50% retrace. So the market went down, retraced 50%, and then went into the first and second targets. Now the extension failed, traded, and then failed, and there are two options for this market now for a continuation lower. Either the 50%, which is trading now, and I know this is not a canonical trace, but that's very often what we see in the SP 500. It likes to trade in 50%. Okay, there's a lot of retraces. And if this market is more technical, on the other hand, we also continue higher and trade into 26.65 before coming down. But as you can see here, we start seeing some participation right at that 50%, 26.50. So this could actually bring this price lower here. I'm going to post this chart and comment this chart as well for those of you who trade the SP 500. All right. Just a final look at the at gold and silver here, and you know, there's very little to say. We know that the level in play here for gold, the lows to highs here been tested twice, and are likely going to be retested either on this cycle of the move higher in the dollar index or the next one. And we will see that we could see then 1311 being retested. Similar situation here for silver, which has annihilated all that advantage, and with this bull trap here, which went well above that 17 level, but it's back to normal now. And if there is profit taking this week, at the end of the week, this market could go back to trade the extension short. Okay, so that's what we see in these markets. If you have any questions, you can post them in the room, and if you have markets you want me to review in these video reviews as well, you can always write them down in the afternoon, and then when I do a video, I'll take them in considerations, or otherwise I will in any case anyway publish a chart. Okay, thanks a lot. You have a good evening, and I'll see you tomorrow. Bye bye now.